Hello everyone. Let's discuss what we can expect next week, that is December 2nd week in terms of Indian market, to some extent about Nifty, a week ahead video. First, short introduction about what happened last week, then weekly technical analysis, and finally what are all the important economic events that we need to look out that will have potential influence on the Indian market. So without delay, let's get started. What happened last week? On Monday and Tuesday, Nifty reacted for the penultimate Friday's GDP data, and on Tuesday's pre-market video, we discussed why GDP was lower. In short, mainly due to reduction in government spending and also reduction in government capital expenditure. So no major problem in the customer demand, hence Nifty increased on Monday and Tuesday, then consolidated on Wednesday. After that, at that time, most investment analysts started to predict the CRR cut and interest rate cut. As a result, on Thursday, short covering in the cash market and tug of war in the derivative market made the Nifty to rally again with some volatility. However, as we discussed in the last video, RBI only cut the CRR from 4.5% to 4% and they kept the interest rate unchanged 6.5% with neutral stance. Here, on this expectation, market already rallied Monday, Tuesday and Thursday. So Friday, Nifty traded flat with negative bias. Overall, in a week time, Nifty increased third straight week 2.3% and about Sensex it increased 2.4%. If required, please pause and have a look. This is the Nifty's weekly increase in this whole year 2024. So far before this time, 4 times Nifty increased for 3 consecutive weeks. Here we can ignore the June-July period since it's due to the election results rally. If we ignore that, on the other 3 times for the following 4th week, 1 time it increased less than 1% and 2 times Nifty decreased significantly. So what it's conveying? Basically, it's conveying we might have some level of selling pressure in the upcoming week. Please note, I'm not saying market will close negative on weekly basis. I'm not saying that. Since in stock market, no one situation is same as previous, and also just now FIA started to buy in the cash market and reducing their short position in the future market, which we will discuss in a moment. But my point is, despite all that, we might face some level of selling pressure and depends upon the buyer's strength, market will close accordingly. So according to that buyer's strength, we can adjust our long-term open position. Basically, that is what my trade plan. At present, I'm holding long 25,000 put option for the June month expiry. If the buyer's strength made the Nifty to go above 1%, like above 24,900, then I might close the position for loss. If the buyer's strength is less than 1%, then possibly I might hold for another 2 weeks. If I succeed, then I will make a video like what are all my own option strategy which I follow. Disclaimer, please don't do trade based on this. I'm just conveying my view and it's for educational purpose only. Anyway, back to the market. In the cash market, out of 5 trading sessions, FIA net bought the shares for 3 trading sessions and money wise they added near 12,000 crore rupees into the Indian market. On the other hand, on weekly basis, DII also net bought for near 1,800 crore rupees. Sector wise, only FMCG closed negative, mainly due to the rumors around GST increase. All others closed super positive. Realty and PSU Bank increased above 5%. Small cap, mid cap, metal, media and IT up around 4%. Remaining financials and auto increased above 2.5%. If you look at it this way, it seems like Nifty and Sensex underperformed compared to most sectors. I mean, just for info, from the recent low in the last 3 weeks, Nifty increased around 6%. During the same period, the Nifty mid cap has climbed by 9.5% and the Nifty small cap increased close to its all-time high crazy 12%. Then on the macro front, for the November month, India's manufacturing PMI data came as 56.6 and service PMI data came as 58.4, both slightly lower than the previous month but still respectable expansion. Here, as per the manufacturing PMI report, India's export reached the 4-month high value due to the increase of international demand. However, the rate of output growth is slowing due to the rising raw material price pressure. Then, based on the service PMI report, very important, please note it down, India's service sector saw the fastest job growth since the survey started in 2005. Again, please note, highest monthly job growth in the last near 20 years. This is a very important data. This job increasing showing how Indian companies are very confident about their business. Since Western countries PMI report showing the slowdown in their job addition. Anyway, again, this PMI data also supported the market momentum. I mean, mostly people just read the top line PMI number and just understand whether the expansion or contraction, but I strongly recommend always read the full report. It gives lot of hidden information like this India's monthly job growth, which normally not available for the retail traders. So in the pinned comment, I will attach both manufacturing and service PMI report link, and please read it. Each report only 2 pages. Then technical wise, Nifty had a extreme volatility on Thursday. However, it managed to end the week above 24,600. Thus on the weekly chart, Nifty formed a reasonable bullish candle with second consecutive week higher high higher low formation. In addition, it closed above both short and long term moving average, which all technically adding more positive narration. In terms of crucial level, as I said earlier, 24,850 to 24,900 zone will act as a crucial resistance, and a decisive sustainable move above 24,900 level might lead to a sharp upside rally up to 25,200 level, followed by 25,500 in the short term. While on the downside, 100-day exponential moving average zone of 24,350 to 24,300 will act as the immediate support. In tomorrow's pre-market video, we'll discuss about the rest of things like open interest analysis, US market, etc. Then coming to the final topic regarding the things to look out. There are 3 important things I expect that will define the Indian market this upcoming week. 1. US consumer inflation. 2. India's consumer inflation, and 3. very important, India's industrial production growth rate. In a moment, we'll discuss why industrial production growth is very important. Then in addition, there are some more secondary macros like European Central Bank's industrial decision, China's inflation and trade balance, etc., which all we'll discuss in daily pre-market video. Now let's look at in detail about the weekly defining macro. First, on Wednesday night, US consumer inflation is scheduled release. Last 5 months, it was around 3.2% to 3.3%, very much constant. So far, analysts haven't released their projection. I'm expecting they might release it either on Monday evening or Tuesday, and based on the projection, we can expect the global momentum to react. If the inflation projection is same 3.2% or 3.3% and no month-on-month surprise, I think market will consider that as neutral. But by chance, if the US consumer inflation comes 3.4% or above, then market will consider that as very negative. Since at present, this is the last important macro data before 18th December, which is next week Fed FOMC meeting. So this consumer inflation number will play a huge role in the upcoming US interest rate decision. Anyway, for this, we can expect Indian market to react on Thursday. Then on Thursday evening, after the Indian market hours, India's consumer inflation is due. I mean, we know last October month inflation increased above RBI's target 6% from around 5.5% on September month. So this November month inflation data carries significant weightage. Then at the same time, industrial production growth data for October month is due. Here, let me tell why it is very important macro for the Indian market. I mean, if we see the July to September month industrial production growth declined significantly, then in line with that, our Indian companies also posted bad Q2 quarterly results. Now this October month industrial production growth data is the very first indication to inform the traders what we can expect from the Indian companies for the Q3 quarterly earnings. So far, there is no any analyst prediction. Hence, between Monday to Thursday, if any analyst estimation will expect to defend the Indian market. market. For example, if the October month industrial production growth analyst projection comes above 4% or 5%, then I consider that as very positive. Let's see. That's it. Those were the key important items we need to keep an eye out this upcoming week. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.